What if I told you that $100 today could be worth over $1,000 without you working a single extra hour? And no, I'm not talking about crypto gambling, lottery tickets, or get-rich-quick schemes. I'm talking about a simple, boring, proven strategy that regular Americans use to quietly build wealth, even if they're living paycheck to paycheck. In 2026, you don't need thousands of dollars to invest. You don't need to be a Wall Street genius. You just need $100 and a roadmap. Today, I'm giving you that roadmap. Step 1. Fix the foundation first. Before you invest a single dollar, ask yourself this: do you have high-interest debt? If you're carrying credit card debt at 20 to 25% interest, investing is not your first move, because even the legendary investor Warren Buffett averages around 10% annually. If your debt is costing you 25%, paying it off is like earning a guaranteed 25% return. So step 1, pay off high-interest debt. Build a mini emergency fund of at least $500 to $1,000. If you've done that, congratulations. You're already ahead of most people. Now let's invest that $100. Step 2, open the right account. It's free. In 2026, you can open investing accounts with $0 minimum. The easiest beginner platforms in the US: Fidelity Investments, Charles Schwab, Vanguard. These are not app hype brokers. They are trusted, long-term firms managing trillions of dollars. Open either a Roth IRA, best if you qualify and want tax-free growth, or a regular brokerage account. If you're under 40 and investing for retirement, Roth IRA is usually your best first move. Why? Because your money grows tax-free forever. Step 3, don't buy random stocks. Here's where beginners make the biggest mistake. They buy Tesla, Apple, Nvidia, whatever is trending on TikTok. That's not investing. That's guessing. Instead, with $100, you want diversification. And the easiest way? Index funds. For example, Vanguard S&P 500 ETF, Fidelity Zero Total Market Index Fund, Schwab US Broad Market ETF. These funds automatically invest your money into hundreds, sometimes thousands of US companies. When America grows, your money grows. Historically, the S&P 500 has averaged around 8 to 10% per year long term. That means your $100 won't explode overnight. But over 20 years, it could become $466. Over 30 years, over $1,700. And that's just from one $100 investment. Now imagine adding $100 every month. Turn $100 into a habit. The real power isn't the first $100. It's automation. Set up automatic investing, $25 per week, or $100 per month. Make it boring. Make it consistent. Make it automatic. Because wealth is built by behavior, not intelligence. Even people with average incomes build seven-figure portfolios simply by investing consistently in index funds. No timing the market, no panic selling, no emotional drama, just discipline. Step 5, understand risk, so you don't panic. Here's something nobody tells beginners. Your $100 will drop. The market will crash. You will see red numbers, and that's normal. In 2008, markets dropped over 50%. In 2020, they dropped fast, and yet they recovered. The biggest mistake investors make? They sell when things look scary. Remember this: volatility is temporary. Ownership is permanent. When you invest in total market index funds, you're betting on the long-term growth of the US economy. And historically, that bet has paid off. Step 6. When you grow past $100, once your account hits $500, $1,000, $5,000, you can consider expanding into total international index funds, bond funds for stability, real estate ETFs. But as a beginner, keep it simple. One broad market index fund is enough to build serious wealth. Complication does not equal sophistication. Fire 8:30 to 9:30 common beginner mistakes. Avoid these. Waiting until you have more money, trying to time the market, watching your account daily, selling during downturns, investing without a plan. The difference between rich and broke investors is not income. It's patience. Moneybag 9:30 to 10 o'clock closing motivation. If you invest $100 today, you're not just investing money, you're investing in a new identity. You become someone who builds assets, someone who thinks long-term, someone who owns businesses instead of just working for them. And that shift, that's how wealth really begins. If this helped you, hit subscribe, because on this channel we break down money in simple terms anyone can understand. Comment below. Are you starting with $100 this year? And remember, the best time to invest was 10 years ago. The second best time? Today.